Okay, hey everybody, it's Brett Fogle from Moonstream Crypto. I want to cover the markets and give you guys a quick market update. Certainly a volatile week and some news that we're going to unpack, take a look at some charts and some studies that you won't find anywhere else. In this video, we're going to talk about Bitcoin and where that's likely to go from here, what's going on with altcoins, and some troubling signs of Solana. It could go either way. So with that, let's dive in and jump over to the charts. So in this chart here, we can see a chart of Bitcoin, and we had a head and shoulders here forming, which is a bearish signal, one of the ones I used to call the market top back in 2021, along with a number of other signals, including our own proprietary ones. But we'll go into that. Left shoulder, head, and the right shoulder. So when we pushed up here with this candle, it invalidated this head and shoulders for the most part. Now, we could make an argument this is a janky right shoulder, but I don't think so. If we had lost the neckline of this head and shoulders pattern, the measured move on that could have put us down to around 90K. And if I open up our order block detector, shows where the buyers are. So with that in mind, and we have used this, we've created this to visualize the concentration of buyers, where the limit buy orders are on the exchange. In this case, Coinbase, they vary slightly exchange to exchange, but due to arbitrage, they're mostly the same. So we see that price had pulled back down here, held at the 50-day exponential moving average. That's good. We had a big red ugly candle here yesterday, and I was starting to worry, or late last night actually, on Thursday night, but recovering a bit, bouncing off the 50-day exponential moving average, one of my favorites, and then these buy blocks showing where the buyers are. And another level of this I'll add in is our early reversal indicator pro that also gives us these arrows of inflection points, but we've added in money flow. So over here, back here on Thursday, May 8th, we saw a big buy block come in and a vector candle here, otherwise known as a fair value gap. Sometimes these midpoints are retested. Didn't quite get there here, but it is where the buyers came in heavy, and they tend to like to support those levels. So we did come down right to that level in there. So for these reasons, I think we do continue higher with the parallel channel. I like simple trading signals. We don't get into Elliott waves and Fibonacci circles and all that nonsense. And that stuff will just confuse you and likely get you wrecked. So basically, parallel trending channel. As long as we're going up and holding the lower channel and we have support below it, 50-day EMA and the buy blocks, we are good to go. Looking at the weekly chart, is looking pretty good too, sort of still in this uptrending channel. Want to see how the week closes out, but we'll see. We have a couple days left. Today is Friday, and I think it'll probably be low volume over the weekend. Of course, this sell-off likely triggered by the Iran-Israel war scares, and so the market has kind of priced that in. I think we are still looking to go higher, and one of the reasons for that is, we'll come back to this study on my path to 150 to 200K, but I want to take a look at global M2 money supply. As if you don't know, typically Bitcoin follows M2 money supply by about 10 to 12 weeks. So this is a 70-day delay to overlap and kind of show this how it tends to follow in step, but on a delayed basis. But based on this, the M2 pushed up from here and about 10 weeks ago. So we should see a rise higher. I think this was an anomaly. We should have pushed up a little bit, retraced, and gone up to around 120K. But again, you know, these markets, a lot of fears, China tariffs, and the world also heating up with conflicts around the world, as we know. So basically, these are not going to be exact. I think we'll see a sharp snapback if we consider this like a rubber band. M2 money supply spiking higher. Market sold off due to war fears. Lots of cash on the sidelines. I think we'll see a pump here going into the next, week or two, and then maybe see another retracement, which are normal during these bull runs. And then we could push higher quickly up into that 150 range. And based on the global M2 money supply, which does tend to lead risk on assets, namely crypto. So with that, let me just hop back here and show you this study. You guys might have seen this before. I will revisit it and just go over it briefly. You can always Google Brett Fogle Trading View and see some of these studies, because I've been doing this ones for about 2 years now and calling for these levels here, namely 150 to 200K. I'll come back to this. Quick review. The reason for that is this same study back in the last cycle, high to low, from the 2017 high to the lows here, with a Fibonacci on that. Exactly called the last cycle high at the 3.618 Fibonacci, right up in here at around 64,000. Of course, the reality is that it was the total market cap hitting $3 trillion that triggered the programmatic selling. Wasn't really directly related to Bitcoin at all, but we can use these Fibonacci's as guidelines. And so using this same type of pattern here, which I've overlaid in blue, and because it's a log chart, we've zoomed out on it a bit. And by the way, if you're looking at this saying, well, wasn't this the top, Brett? No, I don't think so. Many people think, and I believe this was the top, and this was a Wyckoff pattern, an accumulation distribution pattern. This is known as the upthrust after distribution, where the smart money was selling in here, and they sort of have a bull market fake out, and they do a little throw over to fake everybody out, where the big smart money is selling to retail, and retail's panicking and buying and buying and buying, and then of course that was where prices reversed. At any rate, here nor there, if we use that same study from that high there to the low, and we use it for signaling our 1.618 all the way to 3.618, it did line up perfectly with 100,000, 101,000, and certainly we hit that and had a lot of trouble there. I was suggesting we'd have a lot of trouble at 100K. These big round numbers generally are the tough ones, the 100,000, 200,000. See how long it took us to get. We thought we'd hit 100,000 last cycle, and of course we hit here and really struggled a bit. Saw this deep retracement here. Not too bad though in the scheme of things for bull markets. Came down about 30%. These are normal in bull markets. So from here, what happens next? I think that we are still on track for a fast push higher, rising this fourth and final angle here. Typically, if you remember from geometry class back in school, drawing more lines with a steeper angle, you soon have a parabola if you draw enough of them. And in this case, we have this trend line going back for quite some time, all the way back into this kind of range, 2017, touching again in 19, the COVID crash in 20, this market cycle low around 16.5 in 2022. So that was pretty solid trend line there. And then we started putting in a new angle here to there, and where we are, let me move this, is we bounce off a third angle, and potentially doesn't mean we have to get this blow off parabolic top and go this fourth and final angle, but that is generally what happens. So if we overlay this and we sort of put this like right in there, it is overlapping pretty closely, and we still have 200K in the cards if we follow through on this, if we can hold this trend line, and we are testing that right now. So we'll have to see, but my base case is we push up here about 150K, and and have some sell off there, take some profit taking, maybe a throw over to 160, and then this red arrow would signify like a 20-30% correction, ideally back to that fourth and final angle, and maybe not even quite there, where we rally up and go to 200K. So the ideal way to play this is push, hold Bitcoin, accumulate Bitcoin and pullbacks. Going into late June, we still could see a rapid rise higher on this weekly chart and get up into those 150K range. Maybe it's early July, but June's still a possibility, at which point I'd be selling this 150, 155K region, looking for overbought conditions, mostly using our proprietary indicators that you can find at cryptomastery.org. These are our best signals we've ever used, and we've created them to be that and made some accidental discoveries you won't find anywhere else. Keep in mind, if you're using the same signals everyone else is using, MACD, RSI, stochastics, RSI, all of that, you don't have an edge. You are following the crowd. And when I first started trading crypto using those signals, I'm a 25-year trader, was using that stuff 20 years ago. It does not work in crypto as well. And so you definitely want to have an edge, and our signals are the best I've used, and we'll give you an edge if you want to check those out, and I'll be showing some of those today. At any rate, this is my base case, 150K pullback. So sell, take profits here, buy back here. That's how you compound your positions. That's how I doubled my Solana last year, buying on pullbacks in a buy block zone where we could see where the buyers were around 125. It touched there 5 or 6 times last year. I was buying, selling, buying, selling, buying, selling, and doubled the number of Solana in my IRA. That's the name of the game, you guys. So that's the path for Bitcoin. If you haven't seen this, look in one of the earlier videos for my path to and the reasons why I think we'll go to 150 to 200K Bitcoin this year. And just a quick run through them. The green check marks are things that are happening or have happened. The question marks are sort of things that didn't quite happen but might still be in the wings. And the ones that are still yellow are things that are sort of happening but we haven't really felt the effects of yet. So speed run going through these BlackRock Fidelity ETF. We know we have the ETFs. That's a green check mark. When I first started this study in 2000, 2 years ago, we'll make it 2023. We only had 7 of these, and now we've kept adding some because, of course, as you can see down at the bottom, we have new reasons, and new information equals new decision. But anyway, bank term funding program ended. We expected bank failures and push money back into Bitcoin. Didn't quite see that, so that hasn't happened, although it still may, because the number 10 is global fiat debt bubble and the commercial real estate crash, which is likely. That bubble is ripe to be bursting. Then I think we'll see those bank failures. And while the bank term funding program didn't get refunded or funded again, they'll likely do quantitative easing in a different way. These banks are failing because they're holding lots of commercial paper, and then the government, the Fed coming in to bail them out. Somehow, essentially liquidity that can work its way into the markets. So keep that in mind. Number 3, creative financing to QE and pay down the U.S. debt. We've heard some rumblings of that, and revaluing gold. You know, they originally valued gold on the U.S. balance sheet at a much, much lower price. President Trump with the strategic reserve, they are holding all confiscated Bitcoin. They really can't go print money to buy more and put it on the taxpayers. However, creative financing, they're talking about revaluing gold mark to market much higher so they can sell a bunch of it to buy and add Bitcoin to that strategic reserve, and it wouldn't cost the taxpayers any money. We'd have more money because we'd revalue gold. Really interesting. So some stealth QE there. Number 4, de-dollarization and USD hyperinflation. The BRICS nations kind of still in the wings. You know, they we won't go into it, but that's of course Brazil, Russia, India, China, and South Africa, and more have joined to create a new currency or method of exchange for buying oil and gas, etc. So that's still sort of question mark. I think maybe we're getting ahead of that. But the next ones have been happening. Corporate FOMO, of course, FOMO, MicroStrategy, otherwise known as MicroStrategy, otherwise known as Strategy, has been buying Bitcoin like a sailor, not more like a drunken sailor. And even though Michael Saylor doesn't drink, so there you go. Spilling over into Tesla, Apple, BlackRock, a number of companies, even international, starting to use that Bitcoin strategic reserve, or as a Bitcoin treasury strategy rather, and including that big one in Japan called SoftBank. Starting to happen, you guys. U.S. and country adoption as a reserve currency, that is on the way. It's not official, but they are moving toward that. If you read and watch the video by Ray Dalio, Changing World Order, he's suggests and has been suggesting for years the U.S. dollar is losing that reserve status, that reserve currency status, and I'm not sure we want it. I think that administration may be devaluing the dollar for the reason of refinancing that $7 trillion in debt coming due. And also, we haven't had buyers of our debt. Our debt has been downgraded by Moody's and all the other levels. Let's see, all the other, companies that evaluate these debt instruments. Okay. But anyway, we are starting to buy our own bonds. Now, if no one else will buy and refinance our debt, well, it leaves us to be the buyers of last resort. So that's also happening. And also, let's see, post having reduced Bitcoin miner supply. I'm trying to get through this quickly to get back to the charts. So what happens during the halving is essentially by the design, the miners can have or only mine half as much. The halving reward is twice as hard, which means half as many are able to be mined, increasing demand, reducing supply. The miners at one point were selling $12 billion of Bitcoin annually to pay for their energy and their ASICs machines. I'm just back from the Bitcoin conference. You can't bind Bitcoin on your home computer anymore, in case you didn't know. These giant ASIC machines are like tractor trailers almost, smaller ones, but you walk in them, they're massive, and that's what it takes. Very expensive to buy, very expensive to run. Miners need to sell to pay for their own expenses, hopefully at a profit. That's important. All right, what else? We have less available exchange on the over-the-counter probably, we've been saying this for a while, but a demand surge coming. Have yet to really see that, and all of these other states and countries talking about strategic reserve, but they haven't really started buying yet. Political support in favor of Bitcoin and crypto, number 9, that's certainly happening here in the U.S. President Trump wanting to be the crypto capital of the world, and a very favorable administration, and most importantly, getting rid of old man Dirty Gary Gensler, who was so anti-crypto. And we have a much more favorable administration and regulatory environment. So that's huge. Number 10 and 11, still in process. Global fiat debt bubble, commercial real estate crash. I think that comes in 2026. Now we see a flight to quality, scarce assets, gold, etc., but includes Bitcoin. And number 11 is similar. Flight to quality. Pension funds. UK pension funds are starting to dabble in Bitcoin, and otherwise they face oblivion. The money's not there to pay for all these pensions, so we're starting to see the signs of sovereign wealth funds as well. I think it was Larry Fink was on TV saying he was with a major sovereign wealth fund, probably the Saudis, and they were asking him, should we allocate 2% or 5% to Bitcoin? Both would be massive. 401ks, pensions, etc. So there's a quick review of that. Of course, there's some things over here, things that might not contribute, it might be against us. First ever macro global recession, also true. We have now conflicts. Maybe I should add this on here, global conflicts, just to be fair. We can't just be one-sided. So we have global tensions rising and global tensions rising. We could just say potential war fears. Okay, I already have that. Escalation of international warfares. Never mind. We already got that in there, so that's good. Only 4 things. Anyway, so risk of inflation, deflationary bust. If we don't have money printing, bad for risk assets. The thing they're really going to have to do that. They've kicked the can down the road for the next Fed meeting. Probably are not going to get a rate cut in July. They're pushing it out to September. Polymarket and FOMC both putting and placing their bets there. So at any rate, that's the base case. Let's keep moving on this and go over this study. This is the IBIT 4-hour chart. This is like the CME gap. When there are gaps in here, invariably they act as magnets to price, and all of these yellow gaps have filled. The red ones haven't, so we do have some open gaps down below. I think probably those won't be filled until the bear market. Potentially this one, I thought we might come down and fill that. That would equate to a $90,000 Bitcoin and the CME gap there, but it looks like we're putting in a higher high. And, and that's really what we want to see. We want to see this bottom out and go up. And so we'll keep an eye on that. That's just one of the leading indicators I use. And let's see, this is the USDT Tether dominance chart. I have explained this in more detail on previous videos. And you can also go over to TradingView to look at that. TLDR on this, we have this long-standing trend line. Tether, one of the biggest stable coins in the world. Also, by the way, one of the largest, I think it is the largest owner and holder of U.S. treasuries. That's why stable coins are going to be so important and why the government is behind them, because they are buyers of our debt and treasuries, and they're less likely to sell them. China rather, is one of our other big holders of debt, and if they were to suddenly dump it all on the open market, it would be bad. Stable coins would be excellent. Also a good sign that the government's not going to go after stable coins or Tether, because that would be bad. Very interesting symbiotic relationship there. Anyway, so this is an inverse chart with Bitcoin and crypto. As money goes out of crypto markets, Tether goes up, money flows into stable coins and some dollars, but this is a good representation. When did this trend start? Right back in December 2021, beginning of the bear market. Money out of Bitcoin into Tether. See, so when Tether goes down, we're seeing markets rally, and but typically when it hits this line, it reverses. So we saw this come down, reverse, beginning of the bear market, midsummer 2021, around July. Bear market, boom, recovered. Again, hitting new highs. That was the market cycle top, November 21. I was telling people to get into cash October, November, December, pounding the table to get out of the markets in January of 2022. Point being is, as we come down to these levels, we see bounces and market corrections. And we saw that earlier this year, starting in January. So we were watching that. Pushed up, sort of pulled back here as markets rallied again. We're in an interesting spot right now. Tether dominance pushing up a little bit as markets pull down. I think that reverses and we see this come down again, even if it bounces a little more, correct into the weekend next week, but ultimately coming down, and then we start seeing market tops in at least the first wave, that 150K, around at this range of June, July, okay? And then we could push up, see a correction, late summer correction like where that red arrow was, and then we see this come down, crypto correction, pull back down. Maybe we come back down to this line and we get that $200,000 high end of the year, and then it's crypto crash bear market. If we see USDT dominance pushing up off these levels, bull market's over, you guys. More than likely. Again, this trend line down here all the way since 2018. Worth paying attention to. All right, one last quick thing. This is a study one of the things we're watching for the market top, and all you have to look for here is in a couple people, and somebody recently was also mentioning this, and I've recreated the study months and months ago, but essentially when the 200 SMA, the blue line, crosses the prior high, don't look at price here, but over here with the high price of $32 a Bitcoin back in 2011, that's when the SMA crossed that was a market top up here around 1200. Another example, move over to the right, when the 200 simple moving average here crossed up the old top at 1325 and a time frame going up, that was the top here at 20,000. So moving out to the right again, this was a little bit off, but when the SMA crossed this, it was a little bit late. The top was over here a little bit, so these things are not always exact, and even the pi cycle top may be diminishing, and we'd have to kind of project out into the future, which I'm going to do in a minute. But anyway, so 200 SMA right over here, timing wise, called the top a bit late. So what are we looking for now? When the 200 SMA covers and crosses the 67, 68K back here, likely that will also be the top from a timing perspective. So we're just speculating there. And now if we were to just draw this out straight into the future, like this trajectory, that puts us out into August of 26. Doesn't make sense. We're at that stage of the bull run where we would see a pull up here, that parabolic rise, which would cause the SMA to have a higher slope, kind of back like in here. You see that? So with that, that would put us right about to November, December of 2025 for that secondary top and the total top of the market, and then going into the next year. Now, certainly this could come out. Some people are saying Feb 26 as the high. I'm going to suggest we want to be looking to get out end of this year when that SMA crosses the prior top back in here. It's worked 3 times out of 3 before that. And might as well stick to that. We also have our own indicators for watching, of course, and you can learn more about that at the cryptomastery.org. I also wanted to mention to you, if any of you would like any one-on-one help, I am working with a number of private clients. You can go over to moonstreamcoaching.com/start, and I'll just show you that, moonstreamcoaching.com/start. Watch this short video. This is just saying, hey, I'm a real person. I've been trading for 25 years. Back when E-Trade was a green screen and a flashing cursor, and I have about a dozen private clients. If you'd like to work with me one-on-one for 6 months or 12 months, watch this video and then go ahead and click here and give us a little bit of information so we can keep in touch, and watch the video on the following page where you can schedule a call with me. It's not somebody else. If you'd like to work with me personally, I specialize in creating optimized portfolios in a Google Doc that's interactive. We together decide on the optimal coins this bull run. Guys, if you're holding shit coins from 2021 hoping they're coming back, they're not coming back. You want to reallocate capital and at least take some of that out and put it in coins. I've identified half a dozen coins that have 20 to 40x potential this bull run. Quality projects, and I measure them by how far to go to their old all-time highs. Doesn't mean they have to, but these are coins that have the potential for 40x versus many of these other coins that everyone's trying to buy into. It maybe has a 2 or 3x, and that's not a favorable risk reward. Having some of those is good, but I've identified a dozen or so optimal risk reward ratio and ROI for this bull run. So if you want to work with me to preserve capital, reduce risk, minimize your downside, because we have an amazing top red alert market top signal that did call the last top, and I'll show you that in a moment, how recently we used it as getting out and avoiding a 20% pullback. It's very good. It was an accidental discovery, but go fill that out. If you'd like to, you'd meet with me twice a month. We go over the portfolio together. You get direct access to me via chat, a private client chat, and also a way to get into my M3 active trader group, which has some really smart traders in there, and we're doing trade alerts on the fly. Buy this, take profits, reduce risk. I did just put today stop limit orders on a prominent altcoin that if it breaks down, you want to be getting out, and you can't argue with the charts. And that's very important, preservation of capital. So if you want to know when to get out of this market, if you want to have an optimized portfolio to maximize your gains while reducing risk, this might be for you. Typically, my average client has 100,000, six figures or more, but I can sometimes work with people with less, 20K, 50K, but it has to make sense because I only have limited slots. And it isn't cheap, it isn't for everyone, but it is definitely worth it. And my goal is to 10x my value on the fee, which is reasonable considering, and you do work with me directly, and my time right now has been very high in demand, and the opportunity cost is high for doing that, but I do enjoy it. So anyway, that's moonstreamcoaching.com/start, and go watch that video. And let's see. So let's jump into some coins here and see if we see anything important. We've talked about Bitcoin. I'll talk about a few of these. Won't go through too many, but seeing some interesting things. Total market cap is also bouncing and probably going to have some resistance up in this range. It's not going to be a straight up, which gives us swing trade opportunities on these zigzags, but we are still in this parallel upward channel on total 3, which shows not so bad resistance here, and because this includes Bitcoin. But if we go to total 2, which is everything but Bitcoin, we see a much heavier selling. This is Ethereum. This is what leads me to believe we have an altcoin season around the corner. This starting to break out of this symmetrical wedge. Ethereum does not look good. Despite what everyone's saying, there's a lot of buying out there. There's a lot of sellers right here, because if we go to total 3, it's not as heavy. It's a little thinner, and this is basically still some of the alts. But once we break this resistance level, I think it's off to the races for crypto altcoins. Anyway, and that could be around that June timeframe when maybe Bitcoin comes down and we kick off alt season here, end of June, early July. That's kind of what I'm seeing. All right, the VIX up 20%. Obviously, volatility high with the war fears, but those probably, I don't know. I think this is a cycle-driven market, and the daily, weekly cycle low just put in. So from a cycles perspective, we should be going higher here if you're familiar with those. A couple of these other ones, still at risk here. Solana is in a buy zone. Two scenarios there. Either it pushes up and maintains its uptrending channel, or it kind of rolls over and loses this buy zone. Then it's trouble city back down to 100, maybe lower. Don't want to see that with Solana. And let's see, we could look at Chainlink. Chainlink hasn't really been looking so good. We've got a number of other altcoins here, all in the red. And so I'm not going to go into any of these. There's no reason to really be buying anything at this point. I would want to get through the weekend, see how things recover and resolve, and these fears. And I did hear some breaking news, not confirmed, that that the White House was contacted by Iran, sort of wanting to talk. I don't know if they resolve this. There's also news that the Trump team has a tariff in play or agreed upon for China. I'm not taking sides on this. It's just markets hate uncertainty. So if we can resolve temporarily the Israel-Iran conflict and the tariffs with China are kind of in the bag, and the things kind of start settling down a bit, markets are going to fly. Just right now, everything's down, everything's bleeding, including Brett token. Can you imagine? The greatest meme coin name ever. But in all seriousness, these things don't have earnings. They're pure vaporware. It's like the scene in Wolf of Wall Street. Matthew McConaughey, he's like, it's a fugazi, whatever. It's fairy dust. Most of these altcoins are fairy dust. No utility. don't have a monetization model, don't have customers. And last time I checked, customers are good for business. Call me crazy. Okay, so I am focusing my attention to coins that have real utility, real business models, have customers, or venture backed that'll survive the next bear market. Quick look at Ethereum here, a big sell block right here, guys. You cannot argue with these sell blocks. You know, it's like the bank robbers. When they arrested these bank robbers, they go, "Why do you rob banks?" And they say, "That's where the money is." Okay, this is similar. It's like the Wizard of Oz. If I turn this off, everyone thought things were magic with the Wizard of Oz, and then they peeled back the curtain and saw the pulleys and everything else. We can see, peel back the curtains, all the sellers. This is concentrated sellers right here. So I had speculated, do we dip and go up on Ethereum? I don't think so, guys. I don't know. Big heavy sell block here. Possible cup and handle forming, but it is also could be this Fibonacci retracement, and that's as high as it's going to go. And let's not get into that. The chart's getting too messy. We'll see. Show me the money. Ethereum, show me the money or you're dead to me. So far, as of now, they're dead. Chainlink, you know, not terribly exciting, but hey, stay with me because I got some cool stuff to share still. Higher lows, all right. But Compound, Chainlink, I don't know. Just I would focus on Bitcoin for the next phase of the market. AI coins are dead. Why? They're not. There's no money in it. The big companies in AI that are minting money and swallowing like a black hole all of the marketplace are the for-profit AI companies that are offshoots and is incorporating ChatGPT and all the other ones like Claude and Grok. So AI, blockchain AI, not ready yet. Later, maybe Fetch Coin render, but they don't have customers and paying customers yet. It's all vaporware, fairy dust. I question if AI is going to go as hard as people think. Transactions per second, yes. Cloud storage, decentralized physical infrastructure. Let's hope, because there's potential for bigger customers there. Although I do think the decentralized cloud storage needs the AI projects to go, because not to go down a rabbit hole here, but the decentralized DePIN companies are going to benefit greatly from the AI projects, the decentralized AI projects, because if you're a big decentralized AI project like Fetch or something, you don't want to store your data, and it's a lot of data. You don't want to store that on a centralized company like AWS or Azure, etc. So that'll be symbiotic. I think transactions per second is huge. Solana, Sui, when it comes back, transaction speed, Aptos is in this category. And, you know, Sui had a nice little pullback. Sui's actually not a bad buy in this buy block here, and probably head up higher. But it's had such a long run, you know, it's a little bit tired. Once it gets in the price discovery zone over 650, then I think it can run again. But some others look kind of weak. Metis, Cadena, those of last cycle not looking great. Aptos in a decent buying triple bottom here, but I wouldn't run out and buy any of these. I think it's time to let Bitcoin run and look at alts later. Web3, look at all this red, you guys. We just have to let this sort out. DeFi, again, Lido, not looking good. Don't like that chart. Aave, the darlings. Aave's not being hurt too bad, actually, because they have earnings. They've done very, very well because they've had customers and earnings. And look at this great channel that's been forming. So, I mean, fairly expensive. A lot of sell pressure up above. That's why I don't really like Ando, or Aave, rather. And a couple other ones I might want to check out. OGN, wink, wink, nod, nod. Founders of YouTube, lead engineer of YouTube, endorsing smart team from Facebook. This is one I like, and it has possible 50x, 48x. No guarantees, but a little investment here. It's at 6 cents, you guys. Higher lows, and it's kind of been drifting down. But if it even gets close to its old all-time highs, that's a 40x plus. This is one of our internal picks. Can't show you all of it, but hey, if you want to find out more, and if you like this kind of training and you want to join us live every week, by the way, you can run on over to moonstream.io/M3, and I have an active trader class. They also get a private chat with me 24/7, and me featured on Crypto Revealed a couple years ago with Peter Schiff and Kiyosaki and some other people. By the way, anyone see the Peter Schiff at the Bitcoin conference? I was about 100 feet back, and he came out, and everybody booed him, as they should. But it was a spirited argument and worth watching. But anyway, so we do these classes every week on Wednesday at noon, membership area, but most importantly, you get me, you can ask questions, get some high probability cheat sheets if you want to learn how to trade, swing trade, not day trade, and dollar cost averaging worksheet, portfolio tracker, a high probability trading patterns. We've just reduced the fees on this, $249 a month, you guys, but it's worth 10 times that. I'm doing trade picks, trade alerts. There's mountains of testimonials, moonstream.io/M3. Now is the time to be leveling up and adding to your skills and getting the right tools for succeeding in these markets. So these are live trading classes. And if you're not sure what you need, and then, you know, if it's not live coaching, which isn't for everybody, but if you just want signals, you can go to our website, moonstream.io.
Hi, this is Brent.
And there's an interactive menu here. A little button will appear, say start here, and then it'll say, are you a beginner? Are you intermediate? Are you advanced? And it'll help point you toward probably the right project and product for you. So we also have a Retire Rich Inner Circle for kind of people more affluent and longer term investors, right? Because there's shorter term investors and longer term, and it's a little different mentality. If you're swing trading or even swing trading within a longer time frame, right? That's kind of my model, long-term bullish, but I'm swing trading buy low, sell high on the way up. These are the indicators that I've been sharing with you, and very affordable, monthly or by the year. Guys, I'm not here to sell you things. I'm here to give you the tools to succeed, and we are doing a disservice by not pushing them harder. And you guys, trust me, there's a guarantee on them. These are the best signals I've ever used. We've built them to be that way. I chased down the guy who created them and said, I want to partner with you. And then we made some accidental discoveries that have been huge, like the early reversal indicator. This little arrow there, you might say that's cute, you have an arrow. No. The actual oscillator behind there that we almost deprecated or threw away, basically, I noticed a pattern when it went below a certain level and back above a certain level in 3 time periods, had a very high probability of reversing. Now I know and believe, I think we're picking up on programmatic institutional buying and selling. Why? It takes a lot of volume and money and velocity momentum to come from that low zone above 20. And when they do it in 3 time periods, very often it's a reversal. Right, so hence the name, early reversal indicator. Nobody else has it. Another discovery here, the rocket. This pattern right here, I won't describe it, but we've put it into an indicator. This specific pattern looks like a bottle rocket. Imagine lighting the fuse, has to have a launch pad, and invariably that shoots up for quick gains. So guys, you can't lose with these. It's just those 2 indicators alone, not to mention our Bollinger Bands, which are created specifically for crypto. If you're using off-the-shelf Bollinger Bands, they're wrong. They don't contain price action. There's a setting change you need to make for it to work. And my friend Steve Nissan, the godfather of candlestick charts, also told me on a webinar, he taught me when the price hits one of the Bollinger Bands, often it will go to the opposite extreme. See this? Touch the upper Bollinger Band. We color-coded it as red, indicating time to start taking some profits. A reversal's coming. Sure enough, boom, boom, came all the way down to the lower Bollinger Band, and then kind of bounced up. I have some more examples of that. So anyway, and then our trend strength indicator, and these down here are RSI Pro with bullish divergence. When these align, it's like 95%. And if you want to check this out and get a free resource, you can go to moonstream.io/free checklist, and you can download our cheat sheet. It's an interactive cheat sheet that you can check the boxes, right? And it'll give you a trade success score, right? So when you go here, you just need to download it. I was supposed to give you a different link where we get your name and email, but you guys don't need more emails, obviously. So we don't want to bother with that. But here, if you, where did that go? Let me open that up. You need to download it and then open up the PDF. We've specially coded these to be interactive. Check that out. So if you see that green arrow, bullish engulfing, a early reversal indicator. It describes them, gives an example, used with the TSI, the trend strength indicator for confirmation. So when you start checking these off, and you go down here, you have a trade success score. And when you have 2 or higher, I'm usually getting into the trade. When you're getting 3 or 4, I'm adding to the trade. And you have different patterns here. Some are our indicators, some are not, but used in conjunction, it is a huge advantage. And we have Bollinger Bands, we have our radar, which I didn't talk about, and our average true range. These buy blocks are, guys, it's so easy. If you just buy in the green buy blocks where all the other buyers are, and sell in the red blocks where all the other sellers are, that's about as difficult as it is. And I know you don't want to believe me, but I didn't want to believe it either. But that is a huge part of what we do, and sell into those sell blocks. Let me give you another example just to show you what that looks like. Here's a great example. Solana. Let's just open this up and then we'll wrap up here, guys. Look at this. I even have a note to sell. Sell red zones. Why? Here's another memory aid. There's a great Italian restaurant down 4 doors down from me, and they all wear shirts that say the Italians are here, right? This is where the sellers are here. Red, this is visualizing the sell limit orders that are public information on the exchanges, but it's by the human eye, you can't really make sense of it. Only a hardened day trader used to reading the tape on the level 2 can kind of see that, and even then, that's a lot. So right on here in Solana, this was a great place to sell. Yes, I sold Solana at 280, and then I was upset when it went to 300, but I was happy because it came back down. Sellers took it down. Where did we buy Solana? Solana is a great one to trade with these buy-sell blocks. Where did it finally bottom? In a buy block. The buyers are here, and there's our early reversal indicator. And we had these, our other signals aligning. Guys, this is when it's almost like taking candy from a baby. I won't say you can't lose, but you almost can't lose. When this trend strength indicator reverses above 20, then that is a confirmation of the early reversal indicator, also a bullish engulfing candle. So there you have a trade success score of 3, 1, 2, and also the buy block 4, and then 5 is this signal line. It's a modification of a MACD and some other quant work because the programmer is a quant engineer. My partner, also a trader. Very rare to see all 3. And then lastly, look at that bullish divergence, the green circles. This is an RSI. You don't need to know what the lines mean really. The green circles, bullish divergence, we buy when these align. And was that a good sign to get into Solana back at 100? I have video proof I bought it at 104 because of those reasons. And we ran it up back to 180. I do think it kind of recovers when we go to 280, but we have to be open to this. I have specific recommendations to my M3 members in the chat that they have, and they have specific instructions on where to put their limit orders. I'd pull up that chat, but it's kind of difficult here with this without showing everything on my messy desktop. So deep breath, everybody. Okay, so that is all I have for you today. Have a good weekend. Please consider booking a call with me if you want to maximize the bull run. I promise you it will be worth your while, and you can go read reviews on that other page and where you can schedule a call. I believe that's on this page here, on the next page rather, and I'll just show you what that looks like. I've got some very positive reviews, and it's not cheap, it's not for everybody, but I can help you. And these are all private clients of mine that have hired me with 5-star reviews, and it goes on and on. So anyway, or you can join my M3 active trader class. That's at moonstream.io/M3, right? And you can read all about that there. If you do sign up for a year of my coaching consulting, you get access to M3 for free. That's a $2,500 value. All right, but let's find it. Let's get on a call, and if nothing else, I can help point you in the right direction. And not high pressure. It's not a salesperson. It's me. So moonstreamcoaching.com/start. And let's just go back to that here, and okay, and that's where you can book and schedule a call with me. All right, guys, that's all I have for you. Have a great weekend. Be patient. This is not over yet. It is, we have a ways to go for the top. and I would be very surprised if we see that was the market's over. It's every cycle. It's a big scare. I think people think it's done, except for last time. We did think it was going to go higher. So anyway, we'll keep you apprised. New information equals new decision. They're very fluid markets. That's why you want to get engaged in a community like ours. Keep on top of this every day. Cheers, everyone. Bye.